All right, now let's discuss how to determine your stop loss. Let's say price has given you a high, right? So that would mean price was trading up, right? And then we can say price reaches a high, right? And then price gives you a rejection, right? And then let's say that's your signal, and then price decides to give you a retest. You have your retest, and then you receive a rejection. All right, so that would be your confirmation. So what are we saying? We're saying price was going higher, right? Price reached a resistance, and it gave you your first signal, retested, confirming that price is going lower. So now this candlestick, the last bearish candlestick, would be your confirmation, and as soon as the candlestick closes, that's your entry. So either you can use entry, and then the high of your candlestick will be your stop loss. So now this is a risky stop loss because price could come all the way up and reject. However, it's also a stop loss, it's a safe stop loss in terms of if price is to come all the way up high there, that's invalidating the sales, because if price is enough bearish pressure, we should not see price coming to close above our previous high or coming to retest our previous high. There should be something in this candlestick on the lower time frames that price needs to respect for it to go lower. All right, now that's the same as, let's say price has given you a low. Right, let's change that. Okay, let's say price has given you a low, right? We have a low. Price was trading low. With price going lower and lower, right? And then we have a rejection. And then we have a retest and even a stop loss hunt. A successful rejection, right? For price to go higher. So what are we saying? We're saying this would be your entry, and the low of the week would be your stop loss. All right, because price cannot go below our previous low if it needs to go higher. If it needs to go higher, it needs to respect our low. So either you can put this as your safe stop loss, or if you're willing to risk more, that's when you put a few pips below the low that was created, or a few pips above the high that was created. All right, so now that's a safe stop loss, but that's a big stop loss. You'll be losing more. Instead, you could put the safer stop loss, which is a little bit more risky because price could come and take out your stop loss before it continues to go higher or lower. So now let's look for examples in the market. So let's say we have a resistance right here. Not let's say, we have a resistance right there. All right, so let's put our resistance. We have a resistance right here. As you can see, price was rejected. All right. Now on that resistance, what do we have? We have price giving us a bearish pin bar. All right, so that's our signal and that's our confirmation. So instead of opening your trade the moment this candle closes, if you are scared of doing that, you could easily open your trade as the candlestick breaks our low. All right, and then your stop loss would be above the high, and your target, depending on your left, you can, however, then set your target. Let's say, for example, our target is right here. All right, so as price goes lower, what you would need to do is move your stop loss. Move your stop loss a little bit lower as price continues to make new higher lows. All right. So that's our first example. Let's look for another example. So now let's use where price currently is. So we have a low, right? Now let's go on the 30-minute time frame. What we have on the 30-minute time frame, we have price giving us a strong bullish candle. All right, so that's our signal that price is trying to go higher. Price has been respecting our lows, as you can see right here. So price is trying to go higher. So we should have entered the moment the candle closed, and our stop loss would be below the low. All right, so if our stop loss is below the low, we need to make sure that we have enough room for profit. That's at least 2 times more than what we are risking. So what's our first target? Our first target would be our previous high, all right? And then our second target would be the weak fill, all right? So first target, second target, all right? As long as price respects our low, all right? So now, if you don't want to take a risky entry and you want a better stop loss, that's when you wait for price to retest, and then you enter at pullback and you put your stop loss below the low, all right? So now you have a smaller risk. The only thing about doing this is you need to understand that when price is pulling back and you enter at pullback without confirmation, there will always be risk of price falling back to your low, all right? So your trade can get taken out and price can keep going lower. All right, so whatever you do in the markets, you always need to understand that you can never be always right. You might be right and win. We might be right and win. And price retest our order block. As you can see, the last bearish candle, that's your order block. Price can retest this area and then go higher. All right, so you can set your buy limits and your stop loss just below the low. All right, if you don't want to set your stop loss when your buy limit hits, you can wait for the buy limit to get hit and then you set your stop loss according to what the market has given you. So you use the information that the market has given you. All right, so what are we saying? We are saying you have price going lower, right? Price hits support, gives you a bullish candle, right? And then you decide to enter right as the candlestick closes, and you put your stop loss a few pips below. The moment price pushes higher, right? The moment price pushes higher, you move your stop loss to entry, to your entry point, right? That way you're not risking anything, your trade is protected. All right, the moment price, let's say price comes lower, it retests. Let's say price comes lower, right? Price comes lower, right? Price does what it does, it comes lower, it retests, and then it gives you another strong bullish candle. What are you doing? You are then moving your stop loss a little bit higher, giving you a higher advantage. So if price is to come back and take out your trade, you are still winning and you're not losing anything. And if price takes out your trade, don't worry, you can always find another entry. All you have to do is be patient. There will always be another entry. Especially if your trade was taken out in profit or in break even, that's even better because you didn't lose anything, so you still have room to gain more. All right, so now let's practice this. Let's look back in our past and let's practice.